All right, crypto fam, I want to welcome everyone to today's episode of Crypto News Alerts. I'm your host, JV, and this is podcast episode number 1080 of the Crypto News Alerts pod. In today's show, Bitcoin's discount to hash rate, its highest since early 2020, as Mike McGlone, senior commodity strategist at Bloomberg, points out, and quoting him here, Bitcoin supply is declining, demand is rising, price to rise over time. And this just in breaking news, South Africa to treat Bitcoin and crypto as financial products. Let's go. As well as more breaking news, $9 billion European bank N26 will launch Bitcoin trading to its millions of clients, as per CNBC. Also in today's show, we're going to be discussing HODL'ing as Tesla hangs on to all of its remaining $218 million in Bitcoin in quarter three. That's right, they ain't selling. Also in today's show, $4.5 trillion asset manager Fidelity offers Ethereum custody and trading to its clients. That's right, Fidelity Digital Assets just sent out an email to their customers announcing that Ethereum will be available for purchase this month. And speaking of Ethereum scaling altcoin Polygon / MATIC jumps as the ecosystem sees an 8x spike in new projects built year to date. I'll be breaking this down for you. Also in today's show, Bitcoin addresses holding up to 1.9 billion in Bitcoin hit a 20-month high according to crypto analytics firm Santiment. That's right, the number of Bitcoin addresses holding 10,000 to 100,000 BTC, aka the whales, and addresses holding 10 to 100 BTC have reached their highest amount of respective addresses since February of 2021. Also in today's show, Bitcoin is gearing up for a massive 400% rally. Send it, according to crypto analyst Tone Vays, who shares his timeline. That's right, he's predicting Bitcoin will hit a six-figure price in 2023, which he shares in a new interview with Kitco News. And he says that the next halving will trigger the next bull run next year. Quoting him here, I do expect us to have a nice bull market next year because of the halving that's coming up. The halving will probably be a little bit sooner. People always underestimate it, probably closer to March or April of 2024, but the hype that the halving is coming will come a lot earlier. So I would be surprised if we're not approaching that $100,000 sometime next year. We'll also be taking a look at the overall crypto market, all this, plus so much more in today's show. So there you have it. Welcome everyone just tuning in. Again, podcast episode number 1080 of the Crypto News Alerts pod, live and in the flesh. And as you can see, the Bitcoin price action hovering just above $19,200 at the time of this recording. With all that being shared, let's dive right into the Market Watch, which is one of my favorite segments of the show, so we can see what's going on with the overall crypto market. And let's start with Coin 360, which you can see here, which is one of my favorite charts because it shows the visual of the entire crypto market all in one glance. You can see Bitcoin down 0.25% for the day, barely maintaining above 19,200. We have Ether down 0.6% for the day, trading just under $1,300, while Binance Coin, Solana, Polkadot, Avalanche, and MATIC all currently correcting and in the red, while we have a handful in the green, including XRP, up 0.5% for the day, trading just above 46 cents. And also we have Dogecoin, Litecoin, and XLM, which is Stellar Lumens. And now checking out the crypto market cap, let's get a refresh for the latest data. We're currently sitting at $925 billion with $43 billion in volume in the past 24 hours. The current Bitcoin dominance at 40%, even with the ETH dominance at 17.2%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Terra Classic USD up 12%, trading at 3.9 cents, followed by Chain up 7%, trading at 6.6 cents, followed by Elron up 3.3%, trading at $58.80. And there's really not that much happening in the green. As you can see, the majority of the top altcoins are currently correcting and in the red. And taking a look at the overall crypto market for the past week, it's good to see that many of the altcoins do have gains considering the past week, including Casper up 24%, Lido DAO up 23%, we got Quant up 10%, WTW up 19%, and Aave up 20.9%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated at 23 out of 100 in extreme fear. Same as yesterday and the same as last month, as we have been stuck in extreme fear and fear for the majority of 2022. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity like we're witnessing right now. BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. So there you have it. There's the overall outlook of the crypto market. And with that being shared, I want to welcome once again everyone just tuning in to today's live show. And now let's dive into some Bitcoin TNA, aka astrology for men, as per Max Kaiser, and let's dive right in, shall we? Here we go. Here we go. Bloomberg Intelligence senior commodity strategist, the one and only Mike McGlone, says the King Crypto's relative discount to its high hash rate in October is the largest since the first quarter of 2020 and could soon see Bitcoin return to its propensity to outperform most assets. That's right. In a new tweet, the Bloomberg Analyst suggests that Bitcoin's ever-increasing hash rate, which is a measure of the processing power and security of a blockchain, is relative to its price points to risk/reward, leaving favorably. Also like to point out, Max Kaiser commonly says that the Bitcoin price follows the hash rate. Many believe in theory Bitcoin's hash rate should go up relative to its price, and McGlone pointed to a graph noting that the 10-day average of the Bitcoin hash rate in October is roughly equivalent to the level it should be at around $70,000. Let's go. However, the price is instead currently sitting at $19,200 as per this recording. Now, McGlone noted that such a large gulf between the price and the hash rate was last seen during the first quarter of the 2020 swoon, a dip that preceded a meteoric climb that lasted through 2020 and 2021. How many of you remember when Novid hit back in March? We saw the Bitcoin price and all financial markets crash, and we got a very discounted Bitcoin at around $3,000. Now, McGlone tipped that it was possible. We are now seeing a similar price foundation forming now, which he shares here in this chart. You can see the Bitcoin upward hash rate and adoption in comparison to its price. Now, the Bloomberg Analyst, known as a permabull, said that the high hash rates, along with the rise in demand, adoption, and regulation, means Bitcoin could be entering an inexorable phase of its migration into the mainstream at a relatively discounted price. And in a separate post on LinkedIn, he said it may be a matter of time before Bitcoin returns to its propensity to outperform most major assets, as he shares here on crypto Twitter. Bitcoin supply is declining, demand is rising, price to rise over time. Let me know if you agree or disagree with the analyst. And he also says returning to its propensity to outperform most assets may be a matter of time as mainstream adoption progresses and adaptive changes in the U.S. accounting standards give it a lift. McGlone also said the Bitcoin price should continue to rise over time given the laws of supply and demand, adding that the crypto is showing signs of bottoming in the fourth quarter of 2022. How many of you agree that we're likely to see a double bottom here for the King Crypto before the end of this year, potentially surpassing 17,500, which is the current low? Quoting McGlone here, it's little surprise that a relatively new asset that had skyrocketed has declined due to the rapid pace of the Fed tightening in 2022, but Bitcoin is showing signs of bottoming and divergent strength in the fourth quarter, he explained. And previously, the analyst suggested that Bitcoin is a wild card, which is ripe to outperform once traditional stocks finally bottom out, and predicted that the King Crypto had the potential to reach 100,000 in 2022. Send it. If it's going to happen, let's send it sooner than later as the digital currency completes its transition from a risk on to a risk off asset. So there you have it. Let me know if you agree or disagree with the one and only Mike McGlone. And I also shared that South Africa to treat Bitcoin and crypto as financial products, as shared here. Let's go South Africa. Stand up, as well as more breaking news. $9 billion European bank N26 to launch Bitcoin trading to its millions of clients. Let me give you the highlights right here because this is a big deal. The $9 billion valuated German fintech N26 launched crypto trading on its mobile app, starting from Australia and rolling it out to other countries in the upcoming months. N26 Crypto lets its customers buy and sell 200 cryptocurrencies, including Bitcoin and Ethereum, as well as 198-ish coins. Just throwing that in there. I find that kind of ironic that they have 200 cryptocurrencies for sale. Talk about mass adoption. Quoting them here, while cryptocurrencies have seen a decline in value over the last year, they remain a requested and interesting asset class for investors and a growing part of the financial system. So there you have it. What are your thoughts surrounding them adopting Bitcoin and offering over 200 cryptos to be traded? Let me know your honest thoughts in the comments right down below. I want to welcome everyone just tuning into the live show of Crypto News Alerts. If you haven't already subscribed to the channel, you know what to do. Hit the bell icon and be sure to turn on all notifications. If you're on mobile, you have to allow YouTube notifications and change that within the settings. Otherwise, you won't get notifications. So it's very important I point that out. With that being shared, now let's dive into our next story of the day and actually discuss Tesla HODL'ing. their Bitcoin. That's right. Last quarter, they sold a lot, unfortunately, but this quarter, or at least for quarter 3, they have held on. HODL'ing, be thy name. Let's break it down, shall we? Check it out. Here we go. Electronic vehicle manufacturer Tesla has made no further changes to its remaining stash of Bitcoin in the third quarter of 2022, despite nearly $1 billion sell-off in the previous quarter. That's right. The company's Q3 report released on October 19th shows $218 million worth of digital assets remaining on its balance sheet, with no reported losses in the value of its holdings. And based on the current prices, it's estimated Tesla still holds around 9,720 BTC. Now, in the second quarter earnings report, Tesla said it sold 75% of its Bitcoin during the quarter, adding $936 million in cash to its books and recording a $64 million profit from the sale. Tesla CEO Elon Musk explained at the time that the sell-off was due to liquidity concerns from the COVID lockdowns in China, which to me doesn't make so much sense, but hey, it is what he says. The sell-off during the quarter took a large chunk of the company's $1.5 billion position in Bitcoin, which it had revealed in February 2021. At the time, made it one of the largest corporate hodlers of Bitcoin. I also want to give credit where credit is due. Shout out to Michael Saylor, because if it wasn't for him, the first publicly traded company to put Bitcoin on its balance sheet, obviously MicroStrategy. If that didn't happen, then Tesla would have never put Bitcoin on its balance sheet as well. But overall, thus far, for quarter 3, 2022, Tesla posted $3.3 billion in profits, 33. Hey, I just point out the obvious. In revenues of $21.45 billion, which reportedly fell short of analysts' expectations and saw Tesla's stock price fall by nearly 14% in 14 hours of trading, according to Yahoo Finance. And under Musk's leadership, the vehicle company has seen a range of merchandise available for purchase using an ishcoin called Dogecoin since January. His rocket-building company, SpaceX, soon followed suit in May. How many people are realistically purchasing cars with ishcoins such as Doge? Nobody. Just want to throw that out there. One of Tesla's recent products was a limited edition whistle it posted for sale in September. Good Lord, you went from selling flamethrowers to limited edition whistles? What's going on, Elon? Which could only be purchased using Doge. Who wants to buy a whistle using your Dogecoin? Let me know. It's just $60 for the whistle. It's unknown exactly how many units were made available, but it is reportedly sold out within hours, which doesn't surprise me because anything Elon does is going to sell out in hours because he's one of the most influential people in the world, one of the richest in the world on paper, him and Jeff Bezos, but I wouldn't be surprised if there are some secret society cats worth way more than Elon and some of the publicly listed people as the richest people in the world. But nonetheless, what are your thoughts surrounding Tesla hodling their Bitcoin holdings? Do you think they are going to accumulate more Bitcoin into the future? Do you think they're likely to sell their current stash into the future? What do you think the overall objective is with Elon and Tesla regarding holding Bitcoin on its balance sheet? Let me know in the comments right down below. With that being shared, now I want to break down our next story of the day, and we're going to discuss Ethereum custody, which is just becoming available for a $4.5 trillion asset manager, Fidelity, one of the largest asset managers in the world. That's right. The crypto wing of its $4.5 trillion asset manager, Fidelity Investments, is set to offer Ether custody and trading services to its institutional clients later this month. Mass adoption. Let's freaking go. According to an email to Fidelity's customers shared on Twitter, the crypto arm announced new institutional Ethereum capabilities for institutional investors starting on October 28th, 2022, as announced here on Crypto Twitter, which I shared in the intro of the show. The post states that investors will be able to buy, sell, and transfer ETH using the same model provided for Bitcoin investments today, quoting them here. With the Ethereum merge completed, many investors are looking at Ethereum through a new lens, said Fidelity, likely referring to Ethereum's shift to the environmentally friendly proof-of-stake model. Now, Fidelity has been a long supporter of cryptos, such as Bitcoin, outlining in the past paper their belief of it being a superior form of money rather than just tech. And this latest announcement comes in the wake of the new Ethereum index fund, which has raised over $5 million since the first sale on September 26th through a sole investor, according to an October 4th filing. And in April, Fidelity announced plans to allow 401k retirement savings account holders to directly invest into Bitcoin. That's right. So if you're with Fidelity and you have 401k, you can now transfer that into the King crypto. And while last year the company announced that 90% of its biggest clients were interested in accessing Bitcoin and other cryptos, on September 13th, Galaxy Digital CEO Mike Novogratz said that Fidelity was reportedly working towards towards offering Bitcoins to its 34.4 million retail investor base. And obviously that would be a pretty big deal, offering Bitcoin and crypto services to 34.4 million retail customers. Let me know if you are currently bullish as far as this mass adoption goes, because I feel as more and more asset managers around the world, such as BlackRock, Fidelity, the big names out there continue to offer crypto, we're just likely to see the Bitcoin game theory in full effect. So this is absolutely a great sign. But let me know your thoughts in the comments right down below. And with that being shared, and speaking of Ethereum, next we got to break down Ethereum scaling solution, Polygon/MATIC. Why is it important to break down? Well, the gas fees on the Ethereum network right now are absolutely ludicrous, to say the least. A lot of people don't move their ERC20 tokens or Ethereum around specifically because it costs too much. Oftentimes, the cost involved in gas fees exceeds the actual amount of the crypto you're trying to move. This is a major problem with Ethereum, and it's been ongoing for many years. Whereas with Bitcoin right now, thanks to the Lightning Network, you could send and receive crypto virtually free instantaneously, just like that. And with Ethereum, you need a layer 2 scaling solution because right now it's not viable. So that's why we have Polygon/MATIC. So let's break this down. And how many of you are currently bullish on Polygon/MATIC? Let me know in the comments below. Now, the price is jumping as the project reports a near 8-fold increase in applications operating on its ecosystem since the beginning of this year. That's right, 8 times the applications since the beginning of the year. That means like every month something major has been developed. Polygon, an Ethereum scaling solution, says more than 53,000 decentralized apps are operating on its ecosystem as of the end of September, based on data from Web3 developer platform Alchemy. Shout out to Alchemy, quoting them here. That's an increase of over 60% since June and almost an 8-fold jump from the start of the year. The dApps figure is the cumulative number of applications ever launched on both the mainnet and the testnet and represents high watermark of ecosystem activity. Now, the price of Polygon is on the rise, having increased 15% from 73 cents to 84 cents in the past week. And Polygon has a market cap of $6.4 billion and remains trading at around 84 cents at the time of this recording. Polygon says operational teams working on Polygon network shows a more direct amount of activity compared to the number of dApps, which surged after it partnered with Alchemy in June of 2021. Quoting them here, the number of monthly active teams, the most direct measure of developer activity on the Polygon proof-of-stake chain, rose 27% to about 13,700. About 66% of the projects are building solely on Polygon, with the remainder also launching on Ethereum. A single team can have a multiple dApp on the chain, and not all of which are consumer facing. The adoption of Polygon on Alchemy led to the surge in the popularity of new decentralized finance apps and NFTs on the chain, with over 174.9 million unique user addresses and $5 billion in assets secured. Polygon proof of stake has processed more than 2.1 billion transactions to date. Like, whoa, and they're just getting started, if you're to ask me. And adding to Polygon's popularity, the coffee giant Starbucks recently partnered with Polygon to give its loyalty program customers a chance to buy and earn collectible NFT stamps as part of its Web3 program called Starbucks Odyssey. So there you have it. Let me know how many of you are currently bullish or bearish on Polygon/MATIC. How many of you currently hodl this crypto? And for the long haul, let me know your honest thoughts in the comments right down below. With that being shared, now let's break down hodler activity at an all-time high, especially when it comes to the whales, as they have been stacking sats. Now, when it comes to the price actions, short term, I'm not so obsessed with. I look at long term, and I like to follow the smart money. The smart money are the whales. Who have control of most of the Bitcoin supply. So I like to know what they're doing. And this is very good insights brought to you by Sentiment Analytics. So let's break this down, and a quick shout out to Sentiment. Now, the number of huge whales holding the largest crypto by market cap is on the rise. According to the crypto analytics firm Sentiment, they note that the number of Bitcoin whale addresses holding between 10,000 and 100,000 BTC, meaning worth $190 million to $1.9 billion, have reached their highest level since February of 2021, as addresses holding between 10 and 100 Bitcoin, valued at 190,000 to 1.9 million. And as the number of addresses on the network rises, utility should follow suit. As they point out here in this chart, you can see addresses with 10,000 to 100,000 BTC and 10 to 100 BTC are the largest numbers since February of 2021. Numbers don't lie. The analytics firm also notes that Bitcoin addresses holding between 0.1 and 10 BTC now hold almost 16% of the crypto assets available supply at an all-time high as well. So not just the major whales, but whales of all levels are accumulating the king crypto right now. And conversely, smaller whales holding between 100 and 10,000 BTC only control 45.6% of the Bitcoin available supply, the lowest level since June of 2019. And sentiment also adds that stablecoin market caps have reached their lowest level since last December. As they point out right here, you can see the Bitcoin small to mid-size addresses hold the highest percent of the supply at an all-time high, while the Bitcoin whales hold the lowest percent of supply since June of 2019, while USDT and USDC market caps are the lowest since December 2021. Quoting them here, Bitcoin saw a massive surge of coins moving off exchanges yesterday, its largest daily amount, over 40,500 BTC. In 4 months, the supply of coins on exchanges is down 8.4%. As the exchange supply decreases, it de-risks chances of a future sell-off, as they point out here in this chart. Now, with Bitcoin currently trading at 19,200 at the time of this recording, it has been crawling sideways since mid-June. Very boring price action, to say the least, right? The top-ranked crypto asset by market cap is down 0.05% in the past 24 hours, barely down, barely up, and up more than 0.37% in the past week, but down nearly almost 2% in the past month. And with Bitcoin remaining more than 72% down from its all-time high of 69,000, which occurred back at November of last year. How many of you were around in November of last year and got to see Bitcoin witness that all-time high of $69,000? Let me know in the comments right down below. And now for the million-dollar question, when do you feel the Bitcoin price is likely to retain that all-time high of $69,000? Because think of where we're at right now. Let's just round up and say we're trading at $20,000 for the sake of even numbers. That means the all-time high is 3.5x the price action of where we're currently at. When do you feel the Bitcoin price is likely to 3.5x from the current rate to reach a new all-time high? Let me know in the comments right down below, which leads us to our next story of the day, and that's a Bitcoin price prediction of over 80,000. In fact, Tone Vays is saying 100,000 price prediction in 2023, leading into the next Bitcoin halving, which will occur in 2024. Let me know if you agree or disagree with the analysts. And now for the breakdown. Here we go. Experienced crypto trader and analyst Tone Vays is predicting Bitcoin will hit a whopping six-figure price in 2023. Send it to the moon. In a Kitco news interview, the veteran crypto trader says Bitcoin's next halving cycle will trigger a bull run next year. I hope he's right. Vays says he will be surprised if the flagship digital asset didn't reach six-figure prices in the coming months, quoting the analyst here. I do expect us to have a nice bull market next year because of the halving that's coming up. The halving will probably be a little bit sooner. People always underestimate it. Probably closer to March or April of 2024, but the hype that the halving is coming will come a lot earlier. So I'm expecting us to have a full bull run, which may even be complete before the halving because it should exhaust itself. So I would be surprised if we're not approaching that $100,000 sometime next year. I repeat, the analyst says, I would be surprised if we are not approaching that $100,000 sometime next year. Let me know if you agree or disagree with Tone Vays. And according to Vays, there is likely to be a reversal in the crypto market downtrend as the sentiment is currently lopsided. Quoting him again here, so many people are expecting more of a crypto winter, and whenever too many people are on one side of the market, it reverses. And right now I see very pessimistic sentiment. And on the macro front, the veteran crypto trader and analyst says that digital assets might be the beneficiaries of speculative money flowing into them amid the possibility of traditional assets such as bonds and real estate collapsing, heightening. Quoting him here, I believe there's going to be a big collapse in the bond market. There may even be a collapse in the real estate market, but I do think there will be a lot of speculative money flowing into the equities market and into the crypto markets. So there you have it. And to watch this video he did with Kitco News entitled Bitcoin Price to Hit 100,000 in 2023, check the show notes below the video in the description. And let me know if you agree or disagree with Tone Vays and his bullish price prediction that realistically we can hit a six-figure Bitcoin price as soon as next year in 2023, leading into the next halving in 2024. Let me know your honest thoughts in the comments.